sure, we had a lot of people getting so much greedy that they kept on diversifying different type of instruments and kind of building these synthetic CDO, I guess they were collateralized debt obligations and whatnot, and they kept on selling out to people to make a profit. And then you look at what happened with DeFi, and isn't kind of the same thing? I mean, it turned out that those platforms that were promising you that type of yield, they were collecting money and then they were reinvesting those money in the platform that came after them, which were promising a higher yield. So, at a point, the castle just crumbled.
Yeah, man. I mean, so they were basically taking depositors' money to pay, previous investors, which is a Ponzi scheme.
By definition, yeah.
Yeah, by definition, it's a textbook Ponzi. The Celsius head of lending was a former porn star, the head of institutional lending. I mean, you can't make that shit up, but there's no. But that's the thing is, like with Bitcoin doesn't have a yield, right? It's not a bond. It's not like a bond. It's just money. So like any yield in a Bitcoin derivative is like bullshit, right? But if you go to Ethereum, if you go on Ethereum, then there are actually yields, and they're real and they're not, Ponzi bullshit. So that's really interesting. I mean, it kind of ties into the fact that like, you've probably heard me say all the time that like bonds are like the most garbage asset in the world, and like from like a risk adjusted return, bonds are like the worst investment that's ever existed in human history.
If you're looking at a return, absolutely. It's a free return risk, as I like to define them.
Yeah, and it's because of the sovereign debt bubble, and we can talk about that later. But first, I want to just tie into how it impacts Ethereum, and this is kind of something I've just realized, and like that's kind of big for Ethereum, and it's also huge as far as like the environmental narrative push. If that theory about Ethereum being a bond-like instrument is accurate, and also in connection with how shitty sovereign bond instruments are, and then you might have, I always thought that capital was going to flow in from bonds to Bitcoin, and I think a good amount of it will, but it seems like it may even flow more so into Ethereum. If basically in Ethereum it takes 32 ETH to run a node, and then you can you get yield from that from running the node and staking your ETH, and that's a positive carry trade. So it works.
Okay, let me understand that. So basically, if I got it right, you're saying that those same actors which were in bonds, and so they are used to think a specific way and seeking yields and whatnot, they will look at the crypto market, and if they have to make a choice, they will pick Ethereum over Bitcoin because it looks much more familiar to the type of investment they use to look at in terms of yield, right?
Yeah, exactly. That's exactly what I'm thinking.
I got the logic.
And
I get the logic. Yeah. Okay.
And also it'll be pushed.
It could be.
Yeah, it'll be also pushed on. The gates will be opened with the whole ESG narrative. Like Ethereum is wonderful for the environment.
Yeah.
So.
Proof of stake doesn't. It's not so energy hungry. Yeah.
Yeah, but if you
can really build up a really good marketing campaign in favor of Ethereum. Yeah, I get the point. Yeah.
Yeah, so I went through the trade. I just wrote it out like a positive carry trade, that you would do in the bond market, and I went through a lot of different scenarios on that, and if you say you staked ETH for 5 years, or you borrowed U.S. Treasuries and use that money to buy ETH to stake for 5 years. The only scenario where you lost money in real terms that I could find is if the network failed, right? That the ETH network failed. And I think that's a real possibility with proof of stake. So it's, it's one of those weird dynamics, right? Like sometimes the best way to, to understand your true risk if you're like investing in any asset is to first consider what is the probability of it going to zero or, being severely impaired, and then what is the upside potential. And that's really your risk adjusted return. So if, so ETH has incredible upside potential in my mind. But it also
I
does.
think so. I mean, even if you're here to, I guess I'm pretty sure you know Roll Paul, right?
Yeah.
Yeah, he's been pretty bullish on Ethereum over the last year, and he's been deliberately clear about his positions. He was buying up massive quantities of Ethereum because, it's not like he's kind of making a choice in between one or the other, but he was seeing a lot of upside potential in Ethereum in percentage terms, even more than Bitcoin, as he said. So I guess that fits in your logic. Maybe, considering that Paul, it's coming from a background which was, in the traditional finance, is being involved in a lot of bonds operations. So he might see exactly the way you just described, right?
Yeah, and it's like, so going back to the risk of failure, right, with proof of stake, I think that's a real risk. But it's like, how do you manage that risk if you want to lock in the upside potential of Ethereum? Well, you definitely wouldn't want to have, 100% of your portfolio allocated to Ethereum at all times, right? It's just, and it's typically not a way that people think about managing risk, right? You usually don't consider that that's like a different type of risk, right? Like an existential risk. It's not really a price related risk, right? If that happened, like, so if you were massively short on Ethereum and the network failed, the price would go to zero and you wouldn't make any money, So, I mean, your account would say, like $500 million, but you wouldn't, there would be no money there. So, that's the type of risk I'm talking about. Like,
your account can be whatever nominal value it is, but if you don't have a market to sell into, it's like garbage.
Exactly.
I get the point. Yeah.
So that reason right there is why Bitcoin has the highest risk-adjusted return of any asset, because Ethereum has this incredible upside, but it does have a real risk of failure. And with Bitcoin, that risk of failure, I guess it does exist, but it's at this point it's like so small, and it still has the incredible upside potential. So that's why, if you consider from a risk-adjusted return, that's why you would want to have, in my opinion, Bitcoin being the largest allocation in your portfolio. I guess.
If you consider the crypto landscape, and if you have to pick, yeah, absolutely.
Yeah, but you can capture. You can capture the upside of Ethereum and still manage that existential risk by by being patient.
Correct.
Yeah, and not being in the market all the time, right? Because of course Ethereum's even more volatile than Bitcoin, and
Yeah.
and then
For me, that's the name of the game. I know I'm gonna hurt you now, but I kind of sold even more Bitcoin. I sold another tranche of it while we were breaking down from 35K. So I'm now down to 10% my stack that I had in 2021. So, just to let you know, but I don't see it. At least for the time being, I'm not particularly bullish on Bitcoin. So I prefer to manage risk on my spot positions and cash out and reevaluate reassess later on. So
Yeah, I mean
that's it.
that's fair. There's you know no harm in a good trade, right? So, but
Yeah, I mean, overall, it was like I already liquidated kind of 75% of my holdings, and I was like, okay, so I got these 25% left. I got an average purchasing price of about 11K. And this share, it looks really bearish. I mean, it's hovering around support. It already retested once, twice. And if it breaks it, I don't see any reason why I should hold on to it if it's gonna lose another 15-20%. So I'm gonna get rid of it, and maybe I'm gonna buy it back later on, maybe till the end of the year, or maybe honestly Q1, probably Q2 23. That's the kind of a time horizon I have to get some money back into Bitcoin, unless something really awesome happens in the meanwhile. But as for now, I have these forward looking of about another 6 months of not really exciting time to Bitcoin.
and would you say that opinion is based primarily on what the Federal Reserve is saying and doing, or is
Well,
it?
it takes into account what the Fed is doing. It takes into account what the ACB is doing. It takes into account what the BOJ is doing. I mean, at a point, I had to consider Bitcoin, like any other asset. And although I like it, I like the idea behind it. I like the philosophy, if you wish, But it's just money. For me, it's just money at the end of the day. I know that the term "quote unquote" money, it's kind of relative and up to debate, but I consider money what I need to spend every single day to make a living. And for now, I'm still living off of euros, which, by the way, are kind of living through a pretty rough time. I actually went to the bank and I swapped a little bit of my euros to dollars. That was 2 months ago. Forgot. Christ, it was a perfect timing. We just went parity last week, so I mean.
Yeah, so I have noticed that Europeans and other Westerners who are not American tend to be more bullish on dollars than actual Americans are, and but there's a reason. There's a reason for that, because you guys can hold dollars and then buy things in your local currency that's worth even less. So it's like a barrier.
Absolutely.
We don't have that, right? We can't. There's no superior currency that we can hold to buy our appreciating.
Exactly.
You know.
We kind of leave that situation from two different perspectives. You're totally right, and that's because you have the luck, or I don't know if you would consider that luck, but you are the global reserve currency.
Yeah.
And that comes with a lot of privileges, of course.
Well,
For us, it's a little bit different. So we have to look at things in perspective.
well,
Right?
that's the difference, right? I mean, that is a big distinction, right? You guys have, I would assume, in Italy or whatever, have your cash flow denominated in euros, which is a lot worse. You got to remember, I get a paycheck in USD,
Yeah.
so I don't really need to have as much savings in USD as somebody who is European, right? Because I have a huge amount of
Exactly.
cash flow denominated in USD that's constantly
Yeah,
coming
because
every
I
week.
mean, your savings can retain, or quote unquote, again, value relative to mine. Exactly. Yeah.
So I think that kind
I
of
mean,
explains
currency.
the perspective difference, well, a little bit. But again, at the end of the day, I mean, you could certainly hold worse things than dollars right now. I mean, there's certainly a bullish case to be made for that. I do think
I
a
mean,
lot
the
of
problem.
I do think a lot
Yeah.
of
Go ahead. Go
people
ahead.
hold, they're sort of, maybe they are bullish on Bitcoin, but they've kind of come to understand, like, don't fight the Fed, right? You don't want to fight the Federal Reserve, and so they're just
Yeah.
they see buying Bitcoin as fighting the Federal Reserve, and therefore they're going to be patient and wait until the Fed announces that they're going to pivot. And
Oh yeah,
and you know what?
that's
I mean,
that's the current narrative.
so I don't necessarily. I'm not basing any trades or any ideas or any potential trades off that, but I do understand it. Like I do, and I don't think it's like a bad thing to do. I mean, I think that is a good. It's a good way to manage risk, definitely.
Um, yeah,
So
the problem for us. I mean, I'm talking for myself, but I think it's a fair talk from pretty much everyone which is not based in the U.S. It's that even if you look at the bond market, right? It's kind of counterintuitive that it's plunging. It's really going down right now because, I mean, if you look at it, you see the VIX is shooting up. I think it broke kind of, I don't know how many years resistance or what have you, and you kind of start to think, okay, so the VIX is going up, and nations around the world are actually selling U.S. treasuries. Doesn't make any sense, right? The problem, I think, is that for American people or institutions, they look at bonds like an investment. The outside world, they look at bonds like some sort of a stash that you can put in and save it for when the rainy days will come. Because we need dollars. Whether we like it or not, we need dollars. So that's why you see when shit really hits the fan, we liquidate bonds because we need fresh dollars. And that's the point. I mean, even if you look at China right now, I was reading an article just the other day, and it was like China, China holdings of U.S. treasuries is getting below the last 15, 20 years something record low. But there's a reason for that. They need dollars. And so
yeah,
if
but
they cannot have dollars,
Nil,
they need to liquidate out.
I would argue that that's a new trend that is not going to resume, and there's a reason for that. Like I don't think,
Oh, yeah, we don't.
like
We don't know yet. Yeah.
So I'm going to make the argument that China is going to continue to reduce their treasury holdings indefinitely, and there's a couple of reasons for that. One is because, well,
Financial geopolitical.
one reason why China has so many treasuries is because they have a capital account surplus with the West, meaning that
Oh yeah.
they export more goods than they
Yep.
import, and so
Yep.
anybody who has a capital surplus with the West are going to have a large supply of treasuries because they have to put that in something, and
Exactly.
they just put it in the most liquid, safest asset, which used to be treasuries.
Yeah.
Maybe still
Yeah.
might be,
Yep.
but that's a different story. But that's why they were in there, and but they had already started removing treasuries before the Ukraine-Russian war, but that was really the spark that ignited the change, right? When they froze Russian central bank assets and FX reserves, and
Oh yeah.
that is that changed people. In my opinion, people, foreign economic ministers, they can't ignore that risk anymore. Like you know, it's treasuries are no longer a safe savings vehicle if it can be frozen because the U.S. doesn't like you. So I don't think that they're gonna. I think that they'll. That they're gonna. Any of these countries with capital account surpluses are going to store their excess
Well,
capital in things that can't be stolen. So that would,
well,
you know,
from I guess that is a totally fair point, and it's kind of the talk of the hour in the last 6 months since when the the war in Ukraine actually broke out. But I guess there is another problem to it, right? I mean, it's totally fair and good because if you see that your finances could be confiscated like in a blink of an eye, it's just I just need to turn on the switch, and your goods and your assets are frozen, which is a very huge risk for you as an institution or as a country or what have you. But on the other hand, I think you still need to think, okay, as you said, I got this amount of dollars because up until this point, my greater trade relationships has been with the U.S. Okay, so I can choose to cut those relationships and get rid of all these treasuries because I feel like I don't feel safe holding them. But at the same time, if I do that, where where will I get my cash flow if I don't
Yeah.
sell to the U.S.?
So I should mention that I don't think that people are still going to continue to do trade in USD and euro. I mean, most global trade is denominated in USD, and then there's a secondary market for euros. And that's
Oh
pretty
yeah.
much the entire global trade market. I'm not saying that they're going to stop engaging in those trade markets. They're going to do that. What I'm saying is that the excess savings, the excess profit generated from trade in those USD and euro markets won't be held in USD and euro denominated assets.
Oh, okay. Now I
So,
got it. Okay. Now I got
yeah.
it. Yeah, yeah. And for you, the alternative should be something like a crypto asset, something which is censorship resistant.
Yeah,
Something like that.
censorship resistance and something that is
Okay.
naturally scarce. So, think
Okay.
Bitcoin,
I mean,
gold,
yeah.
or
Yeah.
commodities, you know?
Yeah. Or
Yeah.
commodities. I mean, China has been one of the biggest purchaser of gold in the last 5 to 10 years. Yeah.
Yeah.
I was watching that already. Yeah.
Yeah. So, and that kind of impacts the energy trade, right? It furthers the energy crisis because now that these countries have an incentive to no longer save in forex reserves or treasuries, now there's an incentive to store in commodities, and the most valuable commodity right now is hydrocarbons or oil and gas. And now if
Yeah.
those get monetized, that means that they're not being used as exports and sent to countries that need them, and it adds to the supply shortage. And yeah, it's
So more
ultimate.
inflation then.
Yeah, well, higher prices. Yeah. Um,
Yeah.
so so that's not good. I mean, for the world, but it,
No, no, yeah, yeah, I totally follow you. I mean,
yeah,
it's a very simple logic, but it sticks. Yeah,
I think
I agree with that.
I
Yeah.
think the the energy crisis is key to understanding what's going on in the macro environment right now, and
Yeah.
and also Russia what happened during the Russia seizure. Those two things. And
Yeah. I mean, would you? Sorry. Okay. Sorry. Go
oh,
ahead.
I was just gonna say I don't think Dixie is what basically Dixie shows you. The Dixie chart is that it's
No,
a basket of
just
currencies, but it's basically showing you the strength
yeah,
of the dollar versus the euro and the yen, which
yeah. The Dixie is a very misunderstood index.
it's
If you allow
basically
me.
euro, the strength of the dollar versus the euro and the yen, the two other largest central
Yeah,
banks,
I
and
was
they're
saying.
both debasing their currency to stay alive.
Yeah,
So of
yeah.
course, but that it's you don't need the chart to show you that. I mean, like you could just see that, like. But I
You
think,
could just look at the CPI, for instance.
yeah, I mean, Japan has been doing yield curve control forever, and they're still doing it. And Europe actually they announced they were going to stop buying bonds, or they were going to stop buying bonds in April, and now they just announced that they're starting to buy bonds again because of, well,
It's fun.
your country,
Yeah.
your country just
It,
defaulted, and
it's way more fucked up than this because when I was reading that, I was like, it doesn't make any sense, right? Because on one side you're announcing interest rates hike, and on the other side you're announcing a bond purchasing program. I mean, those two things, they pursue two different goals. And I
yeah,
was like, really?
yeah,
And then
yeah.
I kind of read through again, and I was like, oh, okay, so basically they wanna hike rates because they want to support the euro as a currency, overall. But they know, because they're not so stupid, they know that if they raise rates just like that, we got at least 4 or 5 countries like Italy, Portugal, Spain, Greece, and they will go under, and they will undermine the whole eurozone stability, and the whole zone is going to fuck up. So they're kind of trying to do a selective bonds purchasing program to support those nations which they know cannot support an interest rate hikes, but at the same time they still want to support the currency, as a global continent, I guess. And in my experience, when you try to do too many things at a time, it's not gonna end up well.
Yeah, I mean, so basically, your country, Italy, defaulted, and in nominal terms, right? Like, there's no, you guys defaulted.
Yeah, but it was 10 years ago. Yeah.
No, you defaulted right now, in nominal terms, right? That's basically what this program is saying, because the euro has to buy all your bonds, or the European Union has, and also to some degree, Spain and Greece, but mainly Italy. Italy owns 25% of the eurozone debt. So, and then what the European ECB is concerned about is the spread between like German bonds and Italian bonds, and
it's always been like that. Yeah.
That's really what it is, right? They're trying to buy Italian bonds. Well, first to stop them from defaulting, so they can pay their debt, and then second, so that to narrow the spread between German and Italian bonds, to reduce that interest differential. But like you said, they're raising rates, so they didn't explain what they would do if, if all rates in the eurozone rise. I mean, like what if the German rate rises to a level that's too high? Then, then you need to buy bonds everywhere, not just in Italy.
And if you pair it up with the energy crisis, right? I mean, financially, Germans are kind of pissing on our head right now. But if you look at the energy crisis, as fucked up as it is and as funny as it sounds, here in Europe, we are the nation which stacked up on more natural gas reserves, and they are talking about some sort of an emergency plan which would brought us to actually give gas to the Germans. Can you believe how fucked up it is? Because at a point, it could be a situation where the Italian government could be like, all right, you know what? You're freezing to death this winter, so you're asking us for, making you a gift and giving you our natural gas reserves, but at the same time, you're actually killing us with these kind of interest rates hike. So if you want our gas, you need to do something about the financial aspect of it. I mean, I think the eurozone will blow apart because the consensus about keeping it together, it's just not there. The interests are different,
Yeah,
it
so
would be dimensional.
but I would say that they will do anything to prevent that from happening, because think about it like this, like if, say, your country is a good example because they have the worst situation of the whole eurozone. Say Italy, like
Greece is a little bit worse, but again, we are head to head,
just from like a pure sovereign debt bubble perspective, like say Italy like defaulted and then broke off from the European Union and then started issuing its own a new domestic currency. What would happen is the foreign, the banks in the eurozone who have investments in Italy, now they would be getting paid back on their investments in this new shitty currency that's not worth nearly what the euro's worth, and they would basically, it would be a mass default on the banking system in Europe. So basically, that's why they're freaking out, is because you know if the European Union fragments, the entire banking system in Europe fails, and then probably the rest of the world too, because everybody has investments in Europe and connections with Europe. So
And then that's the old topic about the euro dollar system, right? So
yeah. So I guess kind of like revisiting the idea of like what is the Federal Reserve trying to do, and if you put yourself in their position, they, I think an important metric is debt to GDP. I think that's something they think about often because
yeah, and that's why I was telling you that Greece is actually a little bit worse than us, because we got something like 150% debt GDP. They are kind of like 10 percentage points, a little bit, higher than that. But again, it's just splitting hairs at this point, right?
yeah. So if you think about it, like if you're the if you're the central bank or the Federal Reserve, and you're looking at the sovereign debt bubbles, at least in America, I think you realize that the only way to keep the government solvent is to increase inflation, right? So you have to produce inflation so that the debt burden is lesser in real terms, but still the same in nominal terms. So basically, I think that's a lot what was going on during COVID, right? They thought that, hey, we can reduce debt to GDP by debasing the currency and making the government more solvent, all the while monetary velocity is low, so people probably won't notice what's happening. And then obviously then they started noticing what's happening, and it became a political issue. You've got elections coming around, so they have to act like they're doing something.
Oh yeah, that was the narrative that people like Stephen Mamir were bringing along since the beginning of the year. It was a political problem more than anything, at least in the U.S., right?
Yeah,
I don't know how. Are you? Can you feel the pain of inflation in Chicago right now? When you go out to shop, a grocery or whatever, or even your, I don't know, electricity bill, are you noticing some changes? Are you paying more? Can you feel that?
yeah, definitely. You got to remember, I do live in America, so I'm probably feeling it to the less extent than other people.
Oh yeah.
But there are still a lot of people in America that were already on the edge of like poverty, and this has pushed them over. So I don't think I feel it as strongly as other people, but obviously I'm dialed into the issue, and
Yeah,
I also don't have a lot of expenses. Like I don't have a big house, I don't have a family, I don't drive anywhere, I don't have a car. So a lot of the things where inflation could hit you, I don't really have exposure to. So
lucky man you are.
yeah.
No, in relative terms, of course, I could say that even from my perspective, I've been hit a lot less from that, even living in Italy, because yeah, I do have a car. I need to drive to work, but it's just 10 kilometers. So my gas expenses is like 20 euros per week, and I drive an LPG car, which helps because for some reasons LPG didn't really move a lot compared to natural gas or diesel or gas, whatever you. So I've not been hit so dramatically from inflation yet. And I have a pretty small house like you have. It's just an apartment. I don't have kids, me neither. So the
Yeah.
expenses you could have, I don't have them. But when I go to the grocery store, I kind of feel that. it's there. You can see prices. If you compare them with what it was like 6 months ago, you start to think, oh, these vegetables, it's insane. This price is insane. I mean, what the fuck is going on?
Yeah, definitely. I mean, the European Union's definitely, or Europe in general, is definitely feeling that pretty intensely right now. So, but the other thing is like, I don't know how, like the reason why inflation is a political issue is primarily because, that food prices and oil prices are too high, right? I mean, those are
Yeah, the core. Yeah.
those are the two things, and the Fed just says like they've never made an explanation for how rising interest rates would reduce the price of food or oil. I mean, people just accept, even though they've been rising interest rates and it hasn't reduced the prices at all. And so it's like one of those things, it's like people don't even think about it. Now, obviously, rising interest rates does impact the price of real estate for obvious reasons. So I'm not.
Yeah, you told me about that. Yeah.
So I'm not going to deny that, but so there are, in any financial asset as well. But as far as like food, oil, and other commodities, like it's just, I don't know. It's like this weird thing where everybody just accepts that works, but
You know, I know and I understand it's a very controversial figure for you, and I can understand why, but this is one of those things that people like Jeff Snyder were pointing out like last year about, if you can hike rates, but do you think that hiking rates will make people, extracting oil out of the ground quicker? No, it's not going to solve the supply issue we have, right?
no.
So those core part of the CPI will be sticky nonetheless, and people are gonna feel that.
Yeah,
At
I
the
mean,
pump.
yeah, that's one of the thing, and just tying back to the Fed and energy, I think that the big thing is energy, right? You have
Yeah.
Europe, which has a massive energy crisis, and Japan as well, because Japan gutted their nuclear arsenal after Fukushima, and
Yeah.
and then they
Even
relied
Germany did that.
they relied on Russia heavily for their hydrocarbons, which now they're supposed to not trade with Russia because they're a U.S. ally. So they're really
Yeah.
struggling. So Europe and Japan are struggling, and they're engaged in yield curve control. So they're debasing their currency to keep themselves solvent. Well, if you look back in
Yeah.
history and you look at any country that's debased their currency with an energy shortage, it's always preceded hyperinflation. So like
Yeah.
if something, if left to their own devices, right, the euro and the yen would, during energy shortage, would hyperinflate under these environments. Now, I don't think that's going to happen because I think the Fed will step in and start making sure, buying euro and yen and making sure that these markets are stable.
Wait. Wait a minute. Because that's new to me. So you think the Americans will actually come for the rescue towards European allies and Japanese allies
Yeah, exactly.
because of the geopolitical landscape?
Yeah, for a lot of reasons that we just mentioned. You know, one being that, well, okay, so first of all, they need to stop the euro. If the euro and the yen hyperinflate, then those collapse and the banking system collapses, and there's a massive global financial crisis, which obviously the Fed doesn't want, because if everything collapses, then they collapse too.
Yeah.
So they
Yeah,
obviously,
the last one man standing, but either they're gonna collapse. Yeah, okay.
yeah, but I mean, yes, I mean the a collapsing Japan and Europe banking system would be a global crisis, and
Yeah.
it's not clear how that would resolve. So they have an interest in doing that, and also they have their own interest in debasing the currency of the dollar, because they need to get debt to GDP down. So in order for
Oh, Right.
in
Yeah.
order
Okay.
in
Yeah.
order for the U.S. government to be solvent, they need
Yeah.
they need to. The only way the government can remain solvent is if debt to GDP gets down, and the best way to do that is to, inflate the currency so that the debt relative to GDP is lesser, and
Yeah.
they could.
So the ratio is much more in your favor. Yeah. Yeah.
Yeah, and they could do that, so they could still maintain their political stance at home and say, "Hey, we're letting our maturities roll off. We're raising interest rates," and still say with a straight face that they're fighting inflation while going out on the open market and buying Japanese assets, European assets, which would effectively debase the dollar because they're printing dollars to buy euros, buy yen, which would be beneficial for everybody in that situation. So
Okay.
it's
So I mean, it would be something. I mean, I know it's some sort of a financial expedient, but it would be even useful in terms of geopolitical because the U.S. government right now has interests in Europe, because we are kind of the front line against Russia, but Japan on the other side, it's some sort of a powerful ally against China because of the uh, Taiwan matter and whatnot.
yeah. I mean, we really can't afford for them to collapse from a financial perspective, from a geopolitical perspective. Um,
Yeah. Okay. So
so
I was about to ask you a question because I read it on some articles, but I don't have any chances to verify if it's true or not. But there are a lot of what's the word, foundries, the manufacturers that make semiconductors, chips, and whatnot,
yeah,
microprocessors. Yeah. So I was reading this article, and it was like, you know, a lot of the chips which are used in the U.S. Industry, high-tech technology, are actually made in Taiwan for a lot of different reasons. Because it's cheaper, because they have already the infrastructure to do that. And I was relating that to, I'm a PC enthusiast, so I was relating that to graphics cards, right? So Nvidia and whatnot. And it struck me because it seemed, I mean, still standing by the article, it was like a few of those chips that they produce in Taiwan, they are related, they are connected to the chips which are mounted in the system which are used for American Air Forces or Americans missiles defense systems. So the end question was, would you think Americans would just lay off and let that technology being overtaken by Chinese? And so the argument was Americans won't ever let Taiwan falls under the Chinese control because they have too much interest into it, in terms of knowledge, technological knowledge, and what have you. Can you? I mean,
yeah,
it's somehow true, or it's just
yeah,
gimmicky.
yeah. I think so. I mean, the U.S. just passed a major semiconductor bill, so
Oh, you really? Wow.
yeah. And Nancy Pelosi invested, I think,
Oh God.
10 million in Nvidia right before the bill went live, which is a semiconductor
Jesus.
company.
Wow. Yeah.
But
Man.
yeah, but anyway, that's not the point. The point was that I think that bill was passed in response to what you were saying. Like, I think somebody in upper level American national security said, "Oh shit! Like, we can't rely. We have to have
Yeah.
domestic production of this stuff. It's a national security issue."
Yeah, I mean, it was all fair and good up until the point globalization was still working, but it seems like we're kind of deviating out from that road. It's like we are going through deglobalization right now.
Yeah, man, I would tend to agree. Yeah, I think again, I going back to the energy crisis, I think that is kind of dominate whatever the entire discussion. I think countries that have rich energy reserves are going to be fine. So think of like America and Canada. Canada, even though, you know, they have a complete idiot running their country,
Yeah, okay, all right.
they're
Okay.
going to be they're going to be relatively fine, right? Just because they're sitting on so much natural resources.
Well, but even the U.S. I mean, I do remember like the states of the South, like Texas. You are a net positive energy producers, right?
Yeah, I mean, America just sits on. It's a huge country with a ton of natural resources, so you know.
So you're just using it for kind of a strategic reserve, something like that.
Well, it like if you're a country that sits on huge natural resources, it's like a backstop to the idiocy of your own government, right? It's like, like it's just a very protective mechanism, you know. Like Canada, for example,
Oh,
like they can. It doesn't really matter how poorly run Canada is; they still have more energy than a lot of other people, so they're fine. you know, and same thing with Russia, right? Russia has huge energy reserves, and the whole world hates them right now. I mean, not the whole world, but a lot of the world hates them. Never wants to even trade with them or do business with them, but they're still going to be
well,
fine
we have,
and profitable because of how much energy they have. So,
yeah.
so
It's fucked up. I mean, it's like, yeah, I mean, energy is the key, and you can have all the political or moral purposes that you want, and as much as they are fair and good, but at the end of the day, if you cannot sustain your own population with energy, if you cannot keep your population warm throughout the winter, I mean, it's fucked up. I mean, your
yeah,
government, it's not gonna
it's going
take
to
a chance.
collapse. It's going to collapse. I mean,
Yeah.
I don't want to be alarmist, but if I don't think people realize how serious this situation is. I mean, I think,
Yeah,
and
to my misfortune, I actually get it, and I think, I mean, I don't, obviously, you're not aware of what's happening now in Italy, but Draghi just fallen, right?
yeah, no, actually, I've
And
been following that. Yeah, I saw that.
yeah, did you? All right.
Yeah,
And I think there was a specific reason for that. It wasn't about strictly political reasons. It wasn't about, you know, keeping the chairs or keeping the power. It was like because as I was kind of predicting to my own girlfriend, I was telling about that, and it was like in May, and I was like, you know what, babe, this government it's not gonna last because if when you have someone like Mario Draghi, which again it can have the authority, it can have, but at a point, our people they're gonna they're gonna face the they're gonna face the choice in between being supportive with being solidal with Ukrainians and being war during winter. What do you think people are going to choose in this country? And guess what? The same people who actually brought Draghi to fall, which, by the way, were Salvini, Meloni, Berlusconi even, they are well known to have a good past history with about good relationships with Russia. So it's like we are kind of letting government fall because we want to be sure we have energy resources throughout the winter.
yeah. No, the reason why I was saying that it was like a serious issue, and people aren't. The reason why we don't understand the seriousness of the issue in Western media is because of the whole climate change thing, that like
Oh yeah,
has made people think energy is bad, right? They're like anything you use energy for is bad. Therefore, in
well,
people's minds, energy is bad. So why should we worry about not having energy? Well, you know, that's that's just the reason why it's not well understood. But the reason why I'm like saying that it's the biggest issue I've ever seen in my lifetime is if you look back
yeah,
historically, when governments and countries run out of food and energy, that's when they collapse. Uh,
yeah, and
if a
I mean,
government can't provide food and energy for their citizens, they will be overthrown. There's no example in history where that hasn't been true.
yeah,
So,
those are the situations where you actually see revolutions.
yeah, that's what I'm saying. That's why it's like frightening. Like And I don't see them getting their act together. I see them doubling down on this climate change bullshit. And
Yeah.
that makes me scared. I mean,
It's,
like,
it's like stupid when you. I don't know. It's like sometimes. I mean, I can talk with you. I talk with a bunch of other people, which is not many. I usually talk with. I don't know, 15 people tops on Discord, and we kind of go through the same topics, and it's like the old world, everyone out there, it's just going nuts. Either they are nuts or they're not paying attention, and it's like, okay, can you believe that our government is telling us that we need to save on energy because we have these Russian situation, okay, and then they are pursuing these Green Deal politics, but at the same time, they have just restarted 8 coil manufacturing, coil centers, energy producing facilities. So what about a Green Deal? I mean, if you give up on Russian gas and oil just to start again coal burning to produce energy, is that environmental friendly? I don't think it is,
no, the whole, I mean, nobody's going to care about environmentally friendly when they're freezing in the winter.
Exactly.
You know what I mean? Like, nobody's going to care. And, that's why I think this is so urgent. And I think, people in Europe are complacent. Probably some insiders understand the seriousness of the situation. But, if the situation doesn't, like, improve significantly by winter, like, people are going to die, and
Yeah.
and it won't be the elite in London or Amsterdam. It'll be
No.
the poor people in the far corners of Europe who had who never voted for these climate initiatives or any of that shit.
Yeah.
You know what I
So
mean?
it is always the average Joe. Yeah.
Yeah. So that's why it's it's an urgent situation, and I hope that the Fed does intervene before then, because
But
I
okay, but when you say the Fed intervened, do you talk about strictly the U.S. or do you think the Fed can actually, I don't know how honestly, but kind of put in motion some sort of a mechanism by which it can help, Europe, or as we were talking about before, Japan or whatever. I
yeah.
mean, do you think they have the means, something like that,
Yeah, they can go out onto the open market and purchase
and buying bonds? Okay.
buy European bonds, uh, Japanese bonds, and then just outright buy euro and yen on the market.
It would be some sort of a massive, on a global scale, socialized debt operation. Kind of thing.
Yeah, but
Because I mean, even the U.S. citizens, to some degree, would pay for that.
yeah, it would be. Well, the U.S. citizens are going to pay no matter what we do, but from like a sovereign level and an institutional level, that would be beneficial for everybody, because, well, obviously, so the big problem, again, to frame the problem, is that if, as the European Union and yen debase their currencies, energy prices will just go parabolic against their domestic currencies. So the Fed
So
has,
what's happening in Japan? Yeah.
yeah, the Fed needs to step in to intervene in those markets to make sure that they're able to keep affording energy to keep their population and their economy like still functioning, and they can do that by intervening. But they can also do that in a way that would cause the U.S. dollar to debase, right? Because they're printing USD and buying Japanese bonds, European bonds, but they could do it in a way where it would only cause the dollar to debase a little bit, and in relative terms, it would still be debasing less than the yen and the euro. So they could say with a straight face that we're tightening monetary policy. When they
Yeah,
really,
because right now we have divergence in policies, especially in between the Fed and the BOJ. Yeah, absolutely. Yeah.
and those divergence in policies cause more instability in the system because people are saying like, oh well, monetary policy is so tight. Monetary policy is so tight. It's like, yeah, it's tight if you're trying to borrow dollars, but you can just go into the market and borrow yen extremely cheap and then turn around and buy dollars the next second with that borrowed yen.
Oh, geez.
So,
You know what? That brings me to mind. There was a specific section in the Chris Laurie course where he was talking about the operation he ran about uh, borrowing yen in order to buy Australian dollar. That was cool. Yeah, just playing on the interest rate differential. Yeah, that was cool. Yeah.
yeah, I mean that there's a interest rate parity theory that says that that's the reason why when you have those divergences in policies, the price of the currencies diverge as well. So
Yeah.
because of that spread, right? That's the same thing you got going on in Germany and Italy, right? Why the
Yeah.
European
Absolutely.
Central Bank has unveiled their what they call the transmission protection instrument, which is a rebranding
I,
for yield curve control.
yeah. Exactly. Yeah.
But they're worried about that parity for obvious reasons because when you the greater that differential gets, the more unstable the system gets.
Yeah, and the problem is that Europe as a whole is a net importer region. So, I mean, everything is priced in dollar. So when we go out in the open market and we try to buy wheat, go try to buy oil, natural gas, whatever you, if it is priced in dollars and the euro is weakening against the dollar, that just makes that more expensive to us. So that I think that's one of the main concerns right now.
Yeah, definitely. I mean, I hope that the Fed is smart enough to intervene before it becomes like.
Yeah, because we hit the PNR, the point of no return, right?
Yeah, I mean, like they historically have not been able to do that, right? Like
Yeah,
a lot of times
yeah, unfortunately.
they ride in, when everything's burning and after a lot of the damage has been done. Which I hope they don't do that. I mean, I hope it's not like it's February next year and we're just like, oh wow, like wow, we should have known to buy European bonds in
Yeah.
November.
Yeah.
Whoops.
Um,
Like, we'll start buying it now. Sorry that you guys froze.
yeah. You know what? I actually got my parents coming out for dinner, so just prepare something out. Um, it was a very interesting talk. I mean, it was a while since the last time we talked, so yeah, it was very refreshing. Very glad we did.
Yeah, for sure, man.